Fred Atwater here, your friendly neighborhood options trader and skilled technician on the charts. I want to show you Southwest Airlines. Once again, LUV, ticker symbol, love. All right, because a lot of people love this airline. Employees are very happy. A lot of great people working there. The economy is in a nice bit of an uptick here. I think a lot of people would agree with that. There might be some naysayers, but from a technical perspective, a lot of things are working well in these in the economy, the Southwest World Airlines in general. Oil prices are down. There's some conflicts going on around the world. That stuff happens. It's a very normal flow. We have a defense-friendly president of the United States. The economy is doing well, in my opinion. I want to show you guys something here on Southwest. If you remember last quarter, I published a Southwest Airlines recommendation, and it was a buy. And I want to show you what's about to happen here again. If you look here, these little tickers down here, these little symbology in the bottom of that chart says that Southwest is about to hit earnings again. All right. So what are we going to do with Southwest? Well, last quarter, if you followed what we did, we followed an Elliott cycle that started here. It went up. Oh, sorry, let me get my draw tool back on there. 1, 2, 3, and 4, and we had a recommendation right there. That was a pullback to the $49 range, and if you recall, we bought right there. We bought at 49.5, and what happened the next day? We had a gap up, and we sold right there. We made a very hefty amount of profit right there on that trade. So here's what I think is actually going to happen. I may be wrong. All right, 1, 2, 3, back to our other 4. Let's call it a 4, so I have a label. All right, now we have another cycle going on. All right, remember I said commonly off of point 4 we see a boom cycle, I should say an increase in the stock price. There's 5. Okay, what occurs post 5 is a letter sequence. We have an A, commonly annotated with a lowercase a. We have a B, and we have a C. And C can often be associated with the new 0.1. All right, so here's what I am looking at kind of on Southwest Airlines. All right, I think, and I'm laying it out here as a new observation point right there with a proposed pullback at that earnings right there, a little pullback. I don't think it'll be much. I'll be honest, I really don't think it'll be much. Right there, okay, 55.5, 55, something like that. And then if that's 0.2 off of the new cycle, I think we're headed for a very, very bullish 0.3. Okay, that is what I think. I could be wrong because I have been wrong before. All right, so how do you enter when you do this? All right, here is what I did, and actually another couple partners that I work with did based on the analysis that we put forth. $45, okay, BTO, bought to open, okay, Jan 19, that looks like a June, let's make it a Jan 19, 45 calls, okay, that is a bullish strike position. All right, that is on the long side of what we did, and then you can't quite see it on this chart because these strike prices go up here. These stock trades trade price and strike price mean the same thing. It's just in options world you say strikes. We went up here and sold the $60 strike calls because we favor the bullish position on this trade. Why do I say that? Is there anyone besides maybe Stevie Wonder or Ray Charles that can't see the direction in this stock is upwards? All right, so we bought a cautious position that is bullish in nature, that can deal with an earnings surprise. Say if earnings, shoots the stock down in this range, something like this, goes back to this support level, we can actually deal with that because we have short strikes sold up here at $60 that can absorb that cost fluctuation, and then on the longer term we can be very naturally bullish because of our 45 strike long calls. Now, if that all sounds very complicated to you, what else can you do? You can buy the shares, okay? You can buy shares around the 55.5 point, all right? I would also recommend selling some calls at around the 60 point because you want to afford yourself a little bit of protection in case the stock on earnings on this date right here, which is coming up here in the last week in April, if it wants to do a gap down. I am putting forth that I don't think it will do that, but I could be wrong. And if I'm wrong, I want to risk mitigate myself so that things work out properly. All right, it's a shorter video today, 7.5 minutes on Southwest Airlines. All right, there's a lot of people I know that work for this airline. All right, very strong airline. All right, very natural tendency to the bull. This is the 200 simple moving average. This is the 50 simple moving average, and this blue line is the 20 simple moving average. And what does it look like it's doing? If I were in third grade and looking at that, it looks like it's going up. It looks like a snake that's curling back the other way. All right, and when a moving averages cross another one going uphill, it's a bullish symbology. All right, thank you and have a nice day. Thank you for watching. I appreciate it. I must have about 30 of these things published in different venues, and I will tell you, thankfully, I'm batting 1,000. Every single one of them has been right. It doesn't mean I'm a genius. It means I'm just observing market sentiment and kind of seeing what these candlesticks do. Thank you, guys. Have a nice day. All right.